Should you diversify? If you're just starting out as an investor, you would always hear this term. Don't put your eggs in one basket. Why? Because if that basket falls, you could lose all of them. Instead, spread it out to different baskets. In investing, don't put your money in just one stock. Diversify to different stocks so if one company fails, you won't lose all of your money. They do this to mitigate or lessen the risk they have in investing. But is this really advisable? What do the great investors out there say about diversification? Well, we will dive into that in this video right after this. So diversification, should you do it? Well, before that, you should click first the like button, and if you haven't yet, please do subscribe to my channel. Would mean a lot to me. Going back, let's see what famous investors have to say first about diversification. First off, my favorite investor, Peter Lynch, quoted, "Diversification, a big mistake. I call it diversification." Wow, really a big statement from my favorite investor. But wait, if you know Peter Lynch, didn't he hold thousands of companies? I thought he said diversification is a big mistake. Well, I think what he said next will clarify things up. So I don't believe in diversification at all. I would own one stock, but what I do believe in is if I find 10 good stories, they are all equally attractive, I would buy all 10. Then I wait to see them unfold. Now, what he said this time, I really like. Now, to understand Peter Lynch, for those who don't know him, he was a fund manager of Magellan Fund in 1977 and ran it for 13 years. He transformed $18 million to $14 billion. Imagine that huge. Going back to him holding 1,000 stocks. Like what he said, if I find 10 good stories which are equally attractive, he would buy them all. Now, Peter Lynch is a beast investor. He didn't hold thousands of companies just for the sake of diversification. He held them because all of those companies had great stories and fundamentals in it. But can you imagine how inhuman he is? Imagine valuating thousands of companies and he returned 29% annually for the 13 years. His portfolio is diversified, but it wasn't for the sake of diversifying. He held them because those companies had good stories in them. Now, I could really relate to this, although I'm just a small investor. My portfolio kept getting bigger and bigger from where I started. The stocks I hold now is totaling 17. Back then, I only held 3 to 4 stocks since the stock market was really high. But now that a lot of companies are on sale, it went up to that number. But really, I didn't do it for the sake of diversification. I didn't even think to spread my money on different companies to lessen my risk. I just bought the cheapest stocks in my watch list whenever I have cash, so I could really relate to what Peter Lynch said. I find these companies have good fundamentals. Now it's just a matter of whom I would buy whenever I have cash on hand. With that said, getting pointers on what Peter Lynch said, diversification, don't just diversify for the sake of having a lot of baskets. You should know if that company you are buying has a good story to it or has good fundamentals backing it up. Don't just buy 10 or 20 companies out there just for the sake of minimizing your risk. You have to know if all of those companies has a good story in it. Sometimes in that 10 companies, only 1 or 2 are great. Just like what Peter Lynch stated, he would buy all 10 if 10 are all equally attractive. Because it doesn't mean that you are minimizing your risk if you just randomly select 10 companies. No, what if those 10 companies are all bad companies? Then you still heighten your risk. Now let's go to what our next great investor say about diversification, which is the GOAT himself, Warren Buffett. Diversification is a protection against ignorance. It makes very little sense for those who know what they are doing, but he added, it is a perfectly sound approach to someone who does not feel they know how to analyze businesses. If you know how to analyze businesses or value businesses, it's crazy to own 30 or 40 stocks because there aren't that many wonderful businesses and that are understandable to a single human being in all likelihood. And to have a super wonderful businesses and put money to number 30 or 35 on your list of attractiveness instead of just putting more money to number 1. So this is a more detailed explanation on why not to diversify. But like what we've heard, Buffett didn't condemn diversification as something wrong. It is in fact a perfectly good strategy if you think you don't know how to analyze or value businesses. Like he's saying here, It's just like owning an index anyway. But what he said, if you know how to value or analyze companies, it's crazy to just diversify just for the sake of diversification alone. Why put equal amount of money to your 35th best idea instead of just putting it into your first best idea? So this is just like what Peter Lynch stated. He would invest in all 10 companies if all has equal stories to it. But another important note that Buffett mentioned is there aren't that many wonderful businesses that are understandable to a human being. Imagine if you hold 30 plus or more stocks, are you sure you can understand all of them? Now, this is where Peter Lynch is not human at all, like what I said a while ago. He invested in 1,000 plus companies wherein he analyzed and understood it first. Now, in Peter Lynch's book, he shared that's why he retired as the main fund manager early, because he sacrificed family time to understand and find all of those companies. So if you think you can do what Peter Lynch has done to invest in a lot of companies and understand all of them, so go right ahead. Now, I just want to share my own experience and thoughts about this, and a story how my portfolio from 2 stocks went from 15 plus stocks. First, I have a stock watch list wherein every stock in my watch list has undergone the procedure to pass through my checklist first before even being listed in it. Like what Buffett mentioned, I first invest in stocks that I think is the best stock to invest right now. Now, this is the reason why some of the stocks I have analyzed, which were great that had almost perfect checks in my checklist, I still haven't yet invested in because there are still companies I think is the best investment to buy for now. If you have watched my portfolio reveal, a lot of my stocks have 8% plus and some even went up to 13% of my total portfolio. Well, this is because those companies still have a much cheaper price compared to the rest. So don't get me wrong if you think I am doing this for diversification, while some only have 2% or less. Now, even though these companies are equal in value for me, the same with my other stocks, but their percentage is low because the price went way beyond my buy below price so fast. One example in my list was my stock in BPI. You know, if I had only 100k plus during that time when BPI's price plunged down hard, I would put all of those to it. But the thing is, I didn't have that amount of money during that time. But then you could say, why not just wait for the price to go down again? Well, why would I wait for it to go down while almost all the stocks in my list are in the buy below price at that time, where for me are of equal value to one another because I analyze each one of them. And if I waited, imagine its price didn't went down from when I bought it, and I could have missed the opportunity to invest in another different company that is still cheap right now. So I shared this to you guys because you may misinterpret, oh, I only need to hold a few stocks right now. I need to sell them. I'm reaching more than 20 stocks. I should invest in the companies I have right now. Yes, it may be a great company, but is it still worth it to buy it at that price? You know, I don't really care if my portfolio reached 30 companies or whatsoever, because if it comes to that point, don't know if it will. But if one day my portfolio reaches 30 companies, then that means that 30 companies are all great companies for me. I'm not minimizing profits or just diversifying. No, why is that? All of the companies I bought are in my buy below price anyway. It's just so happened it has reached 30 companies, and it would reach that point because like what I said, I am a long-term investor. I would hold those stocks for a long time, and these are great companies that would give me dividends in the long run. And one big factor for me as well is your available capital. Yes, you want to focus on one stock, but in that period of time, do you have enough cash to just have one stock in your portfolio? Like for me, I'm just starting out, and it's not always that a single company I invest in is in my buy below price all the time. One example is my investment in DMCI. I was investing in it for 2 months in a row, and I would still invest even more if I can, but that's the only capital I have during those times, and right now it has gone past my buy below price. So even if I concentrated in it, I can no longer buy it because that would break my investing strategy to buy those companies if they are in my buy below price. Is it worth to buy higher? And while a lot in your watch list is still so undervalued, this is my take here. I don't have millions during the peak of the downturn of that stock. I rely solely on the monthly income I get. With this, how can I invest in just 1 or 2 stock only? So this is what happened that made my portfolio right now into a number of stocks, because it still boils down to whom stocks were undervalued in my radar. I for one would rather invest in another great company than pray for that stock to go down again, especially right now in this crash. What if you waited for that one stock to go down, but it didn't, and all the stocks in your watch list has gone up already. So you missed that opportunity to buy a lot of great companies at a very cheap price because you are waiting for a certain stock to go down so much. You know, the only time I would hold up a lot of cash is when I see there is no undervalued stock in my watch list. That's when I will hold up a lot of cash. So don't overreact when you are seeing your portfolio reaching 10 or 20 stocks, as long as those stocks are great companies which you've bought at a reasonable price. Now react if you're reaching 10 or 20 companies and those companies are horrible businesses. Only 1 or 2 companies in your holdings are great ones. That's when I think you should think about rebalancing your portfolio. This is what our great investors are warning us. This is literally diversification, diversifying just for the sake of diversification. To summarize it all up, don't diversify just for the sake of diversifying. Buy companies which you think are great companies trading at a fair price. But the catch, if you don't think you are really capable of analyzing well and evaluating companies, then go right ahead in diversifying. Just like what Warren Buffett said a while ago, or the best way, just go for an index. Also, don't rebalance your portfolio just for the sake of not being diversified. If you think and believe what you hold are great companies that will prosper up to the far future, then why would you sell them for no reason just for the sake of not having a lot in your portfolio? It doesn't mean you have a lot of companies in your portfolio. You are wrong. Just because this guy is saying he only has 3 or 4 companies in his portfolio, imagine Peter Lynch hates diversification but holds 1,000 stocks. He didn't held that amount for the sake of diversifying. It's just that there are a lot of great companies that are cheap during that time. He even mentioned in his book, everywhere he looked, there were cheap companies all around during his time. Now I think that's about it for this video. I hope you guys understand the difference between diversifying just for the sake of diversification and having a number of great companies in your portfolio. So if you like the content of this video, do press that like button, and if you haven't yet subscribed to my channel, I would really much appreciate it if you do so right now. So see you in the next video.